payroll and costs that are due to disruptions in business due to the pandemic that is currently sweeping the nation. What are the benefits of it? They will completely forgive from the loan up to 8 weeks of eligible costs. Certain rules do apply. We'll talk about some of those as we go through this. Also, what's unusual about this is there are no SBA loan fees. And for the amounts that are not forgiven, you get at least a 6-month deferral with a maximum deferral up to a year. And they're charged at an extremely low interest rate of 1%. Our presenters are myself, Don Pernai, and I'm the Midwest Director of ETHOSystems. I've been around here for a little while. I know it says 20 years. I'm closing in on 30 with our firm, and obviously I have a lot of background in construction and real estate technology. All right, so what costs are covered by the PPP program? Payroll costs are absolutely covered, and we'll talk about those. There are some exclusions in there and some things that you absolutely need to be aware of. Subcontracted costs are also covered. Any interest that you pay on a mortgage, so obviously not the principal, but the interest is covered. Rent that you pay for your space, and utilities to keep your operations running as well. So those are not job-related utilities, those are your overhead-related utilities. All right. When you decide you want to track this inside the Sage product that you have, and once again, capabilities are the same, whether it's 100 contractor, 300 CRE, or Intech for construction. What we're going to walk you through is setting up a project or job in your system, establishing the different cost codes and cost types or categories that you might use for this purpose. And then we also recommend, and this is just a recommendation, that if you've qualified for a PPP and been funded or being funded soon, you may want to put those dollars in a separate bank account, because the idea then is it'll be easy for you to go through and show exactly how those funds were dispersed for the eligible costs that are part of the PPP program. So what we're going to walk through here is just some very simple stuff, going in and setting up a base account to track the actual loan amount, going into job cost, and I like to use Job Central to establish a new job for the PPP. We can track all of our details around that. And then adding cost codes to those jobs. So you're probably all well aware that you can have a standard list of cost codes, and then you can choose to add cost codes on the fly for that given job. So if you decide that you don't want to put the cost codes related to the PPP inside your standard cost code list, you can add them as you go in the system. And then also we'll go through and cover how those categories get established as well. So you make sure that we have those details all covered. Because like any other system, once you get the setup right, then it becomes easy to maintain from there. So let's start there. Here I'm in my Sage 300 desktop. And the idea here, once again, pretty simple, pretty straightforward. I go into the general ledger. I'm going to go in and establish a base account for my loan. And you'll see that I've already plopped this in here. So it's got my title in here, what type is it, so on and so forth. Really not much else to do there. You can choose to generate accounts after that if you'd like to. And then I'll go right to job cost, and I'll go in to Job Central. And when using Job Central, it gives me a list of the existing jobs that I have. I'm going to go ahead and do a new job. And as part of this job, I'll give it my number. I use a 3-digit, a dash, and then 3 characters after that. And the idea here is then I can give it my description. So once it goes through and adds that, that job number in, I'm not going to make you watch me type too much here, but just like to have some data in here. I'll use the office address, even though I haven't been there for quite some time now. And we'll establish that information, hit next. Next thing it comes up with is, what company is this part of? So obviously, if you have different general ledger entities, you're going to want to go through and pick the entity that qualified for the PPP program. And obviously, your individual entities can all apply and qualify. So you might be setting up multiple PPP jobs for each individual entity that qualifies for the loan. Then your cost account group and so on. The next piece, we don't have to worry about. We're not billing any of this information out, so we can leave all the billing piece blank. Same with our schedule of values. But now we have our job structure. And what I've done here is, down at the bottom of my standard cost code list, I've added a few cost codes in for payroll, subcontract, rent, mortgage, utilities, and so on. So I can choose to go in and add all of these at once. Pretty simple, pretty straightforward, obviously, to add those. And now I can classify expenses against each one of those. And you'll see why these are important when we get into the forgiveness piece. When we look at the forgiveness piece, one of the items that they want to make sure that you capture is health insurance and also any retirement benefits that you've paid. Well, I don't have cost codes for those. So I'm going to go ahead and just add those on the fly. So I'll go down to the bottom and hit add cost code, and we'll do 99 to keep it in the same sequence. And we'll do 105, and we'll call that health insurance payments. Whoop. Wouldn't be me without a typo. We'll go ahead and hit OK, and then we'll add another cost code. For retirement benefits. And we'll establish that. Now, when we hit next, the system wants to know if I want to add budgets in for any of these line items. So if I actually wanted to put an estimate in, so if I wanted to go through and say, oh, well, when we qualified for the loan, we qualified for so many dollars in payroll, so many dollars in subcontract. So we'll just go through and put in some round numbers here. Rent and utilities. So I can establish those all as an estimate as part of this job. So now I've gone through, and I just realized I had a typo back at the very beginning. Because it's being recorded, yes, I'm going to fix it. So I see we have a question. Do we know what type of subcontracts qualify? We can direct you to a link at the AICPA that will provide that information. We'll hit next again, go all the way to the end, and now hit finish. So now it'll go through, it establishes that job for us and saves all of our changes. So now that information is inside the system and ready for us to use. So now I know most of you these days probably don't use the old enter invoices. You probably use paperless or timber scan or something like that, HH2, whatever the case may be. But I'm just going to show it to you kind of the old school way. But if I go in here to enter invoices, and now I want to just grab a particular vendor, and we'll do the natural gas. What invoice is it? Of course, I use one I've already had before. What's the amount of it? And we'll just say May utility. My accounting date, I'm going to go in and change just because of my demo data. And now, what job is it for? And if I hit 20, there's my payroll protection program showing up. So that looks good to me. Now notice it goes to default to the cost code that this vendor would typically use. If I hit my list, because I've gone in and created all of my cost codes, they show up for me. So we'll go ahead and hit OK. This category hasn't been used with it, so I have to add that one. And now it's got a general ledger account. Well, once again, that's a default from the vendor. I may want to change this to actually being something that is in a different part of my P&L. So it may be a different expense account, as an example. And we'll grab utilities there and so on. So we'll accept that guy and accept that invoice. Really simple, really straightforward. I'm not going to bother you with too much more of this, but if we just say we want to pay some rent, we'll go ahead and do that as well. Same job. Obviously, I don't have to go through and pull it up if I don't want to. I don't know those new cost codes as easy as I would like. I don't want that I don't want that category. I want the category of rent. So I have gone through and established different cost types or categories for each one of these as well. Identify that. Now that is pointed to the proper GL account, because when I went in and set up my cost type, I'll just show you this very briefly. Not quite as quick as I would like it to be. But if I go into my standard categories, and if I grab the one for rent, I went ahead and put in what GL account is my rent account here. So that way it should reduce data entry errors, because if I'm using a vendor that normally gets coded to somewhere else on my P&L, now I can control that a little bit better here. So just want to make sure you understand exactly why that happened that way. So it's got the proper GL account for me, amount, I can accept it and move on. Yes, I'm tracking taxes. That's just the way I happen to do it. So that'll go ahead now and post over from accounts payable to job cost. And now if I go to job cost and hit post, just to be on the safe side, I can't remember if I have my automatic posting turned on or not. We'll then start to see that data show up for us. Go ahead and let that guy run for a second. And now, there we go. Now, if we go in to do an inquiry, and we can just do a very simple cost spreadsheet here, what we'll see is inside my payroll protection program, I've got $8,000 in costs that have been established. If I drill in a little bit further, I see what I had budgeted, what I've spent, and what's left in detail for each of these, and so on. And obviously all my drill downs are the same, drill in as they would with anything, get to the vendor, so on and so forth. So that's kind of the first step. Very simple, very easy to record that data that way and now have it all tracked for me. Similarly, I'd want to track my payroll costs. Well, we know a lot of your payroll costs are going to go to jobs. So you're not going to actually enter people's time against the PPP job that you've established. So what we would do in this scenario is we would utilize inside payroll the totals from a given pay date by type that then allow me to post that as a direct cost inside job cost. So if I go out to payroll, what I've done is I've cheated here a little bit. I've got my GL recap ready to go. And what this is going to do for me is show me by account for the pay date that I ran it, what all of my different expenses were. So it would be these amounts that I would want to go through and book into the system as my labor costs for that pay date. Now, I noticed we have a question, how do we handle payroll that's outsourced? So in those cases, what you would want to do is, if you're using, like a payroll processor, is take your payroll register that you get from your processor and record that the same way that I'm about to record this. So what you would do in here is you would simply go to job cost, under tasks, and go to enter direct costs. And now this is just like a journal entry into job cost. So now I'm going to go through here and record this information. So I know the job is my PPP job. The cost code I want to choose. Now at this point, this is where I want to be a little bit specific about it, because I see in here that I've got employee benefits, wages. I might have, health insurance payments, things like that as well. I want to make sure I get all of that. So what I'm going to do here is I'm going to go in and I'm going to grab the employee benefits and book that, and then I'll book the rest together because that's all regular wages. So let's go here and say benefits. What category do I want to put on it? Now, you can put in a labor burden category, the same one as always, or if you want it to go to a different GL account, I'll talk about that in a minute, you could actually set up a different category for it. So it hasn't been used for this one before, so we'll go ahead and add it. And now we'll just put in our dollar amount. Whoops, sorry. And that was $33.70. So used to working with 2 monitors, probably like most people. And we'll just put in here benefits for weekly payroll. Now, one thing that's important to note here, it does show a debit and credit account. Because I'm looking at the GL recap, these items have already posted into your general ledger. So you really do not want them to post again into your general ledger. You're just looking for a way to classify it so that when you go for loan forgiveness, you have all of the data in one place, easy to get to. So what you want to do in this scenario is you actually just want to use the same debit and credit account. That will force the system to do no entry at all. It will simply, because it's the same account in and out, it will record nothing. Okay, now I'll record the rest of my labor costs. And the dollar amount on that, and I keep doing the wrong thing there, sorry, is $26,116. I'll let the rest of that stuff copy over, save my line, finish, and post it. So now from that perspective, okay, I don't know quite what happened here. Hold on one second, please. Sorry, just one second. There we go. Sorry about that. And now it will post that through. All right. So now if I go in and look at my information, what we're going to see here is all of those costs that have been recorded for me. So if I go in here, go to inquiry, cost control, and we'll look at a cost spreadsheet. I look at my payroll protection, I see my total costs, I drill in, and now I see the detail of each one of them established for me. So I've got my total line at the top, payroll, benefits, rent, utilities. So all that detail is there and easy for me to use. All right, so that's how we get the data recorded in 300 CRE. The same capabilities are out there for 100 contractor, and Sage Intact. If you want to see either of those in detail, just shoot me a note and I'll make sure that I take you through that in detail. Happy to do it. Ed would do Intact. I would do 100. Okay, so we talked about how we enter that detail in. We enter in those items. We've got them all available to us now for our daily type information here. And now let's take a minute to talk about loan forgiveness. So an important point is loan forgiveness will be determined by your issuing lender. So what's nice about that is you've already got a relationship with that bank. So whoever your lender was, they are the ones who will determine your loan forgiveness. It's limited to the actual costs of the 8 weeks after the loan was dispersed. Any employees that are outside, their principal address is outside the US are excluded. Some independent contractors are excluded. I know there was a question about that, and we'll get you that proclamation from the ICPA. And at least 75% of the loan amount must be used for payroll costs. So you have to use at least 75% to pay your employees. Borrowers will have to show documentation on those qualified expenses and payroll. And lenders have 60 days from the end of the loan to determine your eligibility for forgiveness. Any amount that is not forgiven, 6 months of it is interest-free, 18 months of it is interest only, and then you have to pay the balance that's left at the end of those 2 years. Now, your covered payroll costs are identified as salary, wages, commission, or similar compensation. Yes, bonuses are covered. Cash tip or equivalent, vacation, parental, family, medical, or sick leave is covered. Now, one thing that's important, and you'll see this here in a minute, any sick leave that was handled as part of the Families First Act is not going to be covered. And that's because the government's covering that as part of a tax credit to you. You do have some allowance for dismissal or separation from employees. And you can also, covered costs are healthcare benefits and insurance premiums, retirement benefits, and state and local taxes. So you'll see here in a minute, we've got a little Excel spreadsheet that we'll share with you. And those will be the items that you want to make sure you have in detail tracked. All right, so things that are not included. Compensation of any individual in excess of an annual salary of $100,000, prorated for that 8-week period. Employer side federal payroll taxes, not state, federal. Any wages paid outside the US. And as I mentioned a minute ago, any family first paid sick leave or family leave for COVID purposes. That's being reimbursed by the government via an employment tax credit. Okay? All right, so let's take a minute here now and let's get a look at our spreadsheet. Okay. So this is a spreadsheet that we had mentioned. Here's our disclaimer. So when it comes to working with this spreadsheet, what you want to start with is, at letter A, what was your loan amount? So we'll do an even 250,000 here, just as an example here. And now you key in all of the different payroll costs that you have during the 8-week period. Okay, so if you're funded on a Monday, it starts at that point in time, those 8 weeks. Okay, so you'll want to make sure that you track that. And in some cases, you know, if you're paying people twice a month, you'll want to be aware of exactly when you were funded to make sure that you get the total benefit in there. So now if I come in here and say, well, what have we had in wages? Maybe we've had $210,000 in wages. Group health insurance was, say, another 12. Retirement benefit costs were 2,500. State and local taxes were 1,800. And obviously what it's doing is it's totaling up at the bottom the total forgivable expenses. Now, what did we have in rent and utilities and so on? So now you'll notice then it is actually performing a calculation to say that you have to have at least 75% of the expenses be payroll related. So it is making sure that the non-payroll costs do not exceed 25% of the total loan amount. So as an example, if I came in here and said rent was 100,000, now you'll notice non-payroll expenses that would not be forgiven is the 19,555. Okay. And then down at the bottom, part of your loan forgiveness is based upon your FTEs that you've had. Yes, everybody will get a copy of this spreadsheet. So the FTEs that you've had. So during these 8 weeks, you'll want to make sure you put in your average FTE number. So if we had, say, 20 employees during this time, that is then compared to the lesser of the number of FTEs you had last year between February 15th and June, or this year immediately preceding the pandemic. So as an example, if I come in here and say, well, last year during this time, we had 24 employees, and right before the pandemic, we also had 24 employees. Well, now what happens is we've had a reduction of 16 2/3% of our staff. So therefore, it is not going to cover all of our payroll costs. So that amount of our loan will not be forgiven. The 40,667 will not be forgiven. I'm just going to go in here and make these dollars a little bit higher. So now it tracks how much could not be forgiven and handles that way. Obviously, if we went the other way, we're going to have no issues. We could, because now we've had an increase in our FTEs. So that is an important caveat to the forgiveness of this loan, is that you want to make sure that you know exactly where you stand on your FTEs during this period in time versus the period immediately before it or last year over the same time. So if last year had been different, notice it will take the lower of the two. So you'll want to be aware of that as you track that. All right. And then it takes you through all of this. So obviously, if we have only 175,000 in payroll costs, and we'll just say that, we have the same number of employees. Now in this case, we've only spent 207,800 on qualified items. So therefore 42,200 would not be forgiven. Okay. All right. So wanted to make sure we covered that. Joni has mentioned, everybody, this is available in the materials right now. You can download it from us here. And then one other thing to be very aware of is a word of caution. At this point in time, expenses that are being reimbursed by the PPP may be a taxable event. So you want to make sure that you are aware of this. We do have a link that we can share with each of you from the AICPA about this topic. Now, they are currently lobbying Congress to get this provision changed to make it non-taxable. However, at this moment in time, it is still considered a taxable event. Okay, just want to make sure that that's something that everybody is aware of. And bonuses absolutely can be part of the costs that are forgiven. You just have to be careful about the $100,000 limit per employee. Okay, with that, obviously, if you have any questions, please feel free to reach out to either Ed or I, and we certainly appreciate your time. And if you have any questions, please feel free to let us know.
Thanks, everybody, for joining. It takes a little bit for the recording to render, so I have an automated message going out to tomorrow with the recording. And the first minute got blipped. I don't know how, but it's the world we live in right now. So it starts right after the disclaimer, which you'll be happy to know, Dom. I'll see if I can attach these slides to it as well, so you'll have this to refer to. So thank you, Dom. Great job. All right. Thanks, everyone, for their time, and have a great day.
Thanks, Joni.
Thanks,